me know. I'm going to start off with this program here. Well, first of all, I want to tell you a little bit, just real quick, just give you a little bit of background on AnnieMac. AnnieMac's out of New Jersey. We're a national company, can lend in any state. I'm personally licensed in Connecticut. If you've got somebody in another state, just let me know. I'll still take their application, and I'll set them up with another loan officer in our group who's licensed in that state. We do just about everything. So don't think that we just have the cash to keys program. We've got, the conventional FHA, VA, USDA, all that stuff. I can do Fannie, Freddie, and then I also have non-QM programs like bank statement loans, DSCR loans, and some other out-of-the-box options. So if you run into someone that got denied somewhere else because they're 1099 or they just switched to 1099 or just switched to W-2, call me. Let's run over the scenario. Let's not let it just pass away and see if we can do something with it. Okay. Now, AnnieMac has come out with some programs that I think are very unique to the marketplace. This is one of them. So the Appraisal Assurance program, what this does for you is on the listing side and on the buyer side. So you've got a buyer, they want to put in an offer at $450. They want to sweeten their offer a little bit. Send me the address. I'm going to put it into my back office, and within about 2 hours, I'm going to have an answer for you and a cert. This is conventional 10% down only. Okay, we can't waver from that. But as long as they're checking at least those two boxes, send me the address, we'll put it in. It's going to cost me a little bit of money to get this done, but this works a lot like mortgage insurance works. So we actually have insurance on the background for this. What AnnieMac is doing is they're running comps in the background, saying, okay, 123 Main Street, 450,000. Does that comp out? Yes or no? Okay, no. We can give them an appraisal waiver up to 425, right? And then I'll hand you the cert saying they can do an appraisal waiver up to 425. Now you can submit that offer with no appraisal contingency up to 425. Maybe it'll come in higher. Maybe it'll come in at 475 and you've got some room to go up. Now, same thing on the listing side. If you have a listing and you want to offer that to people that come into the door for an open house, same thing. Give me the address first. We'll get that cert set up. And now I'm selling this house at $500,000 and I've got an appraisal waiver up to $525. So you'll have the appraisal waiver before you put the offer in. You have the appraisal waiver before you sell the house. So you know that when the offer comes in, you can say, hey, listen, if you want to put this in with no appraisal, go see Mike, and he can set you up, and we'll put the offer in with no appraisal. So how this works on the back end, because I started asking questions about this. I'm like, all right, how's our company doing this? What happens if the appraisal doesn't come in? So we're literally insured for the difference. So we're putting it out there like, all right, we think this is going to come in at $300,000. It comes in at $290,000. All right, we've got an insurance for that gap. That's basically the way mortgage insurance works, right? So like 20% down was always the normal conventional loan until some genius stood up and said, what about if we just insure the banks for the difference if someone puts 5% down? And that's where mortgage insurance came from. Like, we're going to insure the banks. It's more of a risk for the banks to do a 5% down loan versus 20. How about if we insure you on the difference between the two in case they go belly up, right? And that's why mortgage insurance drops off after they hit 78%.
Is there a cost to the buyer? Should it not appraise and that insurance kicks in?
No cost there to them for that. There's a cost to me for putting it in of $65, and then another cost to me when it closes of $250.
Got it. And so the strength of this is that our buyers can submit offers with no appraisal contingencies, and not have to worry about the appraisal because it's all taken care of regardless of the price of the offer itself.
Exactly.
Yeah.
Exactly.
Okay.
Yeah.
And the appraisal is definitely still done. It's not waived completely where there's no appraisal.
We're still going to do an appraisal so that we know what the number is.
Okay.
But if we give you that appraisal cert, we're certifying that it's going to go through with no appraisal.
So it doesn't matter the outcome.
Okay.
Right. Correct.
Interesting.
Yeah. So that we find, super helpful for, listings that, maybe you're having a hard time selling it. Maybe it's a little bit funky property, maybe you just want to, make a better offer, when you put that in. So even if your buyer is with another bank and you call me on a Saturday, I can still get it done. I'll get them pre-approved quickly and get that in, get the cert for you so you can put in the offer right away with no appraisal.
So can you explain to me again on the listing side how I can use that as a tool? So say I've got a property and it's listed for $400,000. What is the benefit of me. I can tell potential buyers, talk to Mike, you can submit an offer without an appraisal rider.
Yeah, exactly. So you can come to me even before you list the house and say, Mike, here's the address. How much, how high can we go?
Gotcha.
And I'll submit it, and then they'll let us know, hey, we can go up to, 4.25 or whatever the number is.
So
with no appraisal.
If it's over, if we're having offers over asking price, we know that with you guys, we won't have to worry about the appraisal.
So that way, if you have buyers walking through, and maybe they have financing, maybe they don't, but maybe they want to sweeten their offer somehow. Normally with like Fannie Freddie, you got to put the address in before you run it through direct underwriting. So every file we have to run through the computer, and the computer checks how you have the file set up, what the credit profile looks like, and it spits us back findings. If someone's doing 50% down and they've got a lot of assets, like a big 401k, a lot of times we'll get an appraisal waiver. But sometimes not, depending on the property. So here is a great way to get an appraisal waiver on something that typically is not going to get an appraisal waiver. I've never seen one come through with 10% down before.
And an appraisal waiver typically waives the appraisal completely. Like there is no appraisal, but in this case, there still is an appraisal, but it's the same net effect.
Right. It's kind of like for informational purposes only.
Okay.
Like when you do an inspection for informational purposes only, same sort of thing.
Gotcha.
Yep.
Oh, that's interesting.
Yeah. So that's appraisal assurance. Keep that in your back pocket. That's a good one to have. And then the next one I just want to touch on is rate relief. All right, thanks. So rate relief has got two things it's going to do for you. Oh, where'd the picture go? What happened? So first of all, this could be used as a tool to develop leads.
Thank you.
And if you're having a hard time selling a house, we can lock a rate in on the house that you're selling and advertise it on NMLS. So you got a client that's having a hard time selling their house at $450. Instead of dropping it to $425, maybe they just drop it a little bit and put a little bit of money into a buy down. So we can now advertise, maybe we advertise a 6% rate or a 5 3/4 rate available with this house, and it's ready to go. Now, obviously, there's going to be some caveats to that. It's probably going to be 760 plus credit score, that type of thing. So when I get their scenario in, it might change slightly, but if they have good credit, it will hold to the numbers that we're advertising. So if you have a house that's sitting and sitting and sitting and it's just not selling, right, instead of dropping the price, have the buyer put some money into a rate buy down. And now we can lock that rate and we can advertise it on MLS, saying we've got a rate for this house of 6 1/4, 5 3/4, whatever it might be.
Mike, how much would that cost for the seller to do the buying?
$1,200 up front.
And is it so upfront? Gotcha. So
And that's just kind of like a deposit on the buy down.
yeah.
And then when the buy down comes through, if it's a point or a 1.5 or 2 points or whatever it is, maximum we would go is 2 points. I don't want to go any deeper than that.
Yeah.
2 points is 2% of the loan amount.
And if a buyer comes in and they're not using AnnieMac or anything, do they lose that $1,200 or is?
No, they'll get it back if it's not used. Yeah. It's there as an enhancement, and sometimes buyer comes to the table and they've got their own bank, they've got their own rate, they're happy with that. But what it has done for you is it's created a lot of interest in your property, and you may have developed another 10 leads from this. So if it doesn't work as a rate resource, it worked as a lead resource.
Yeah. So for lead generation, so what could that look like in like regular terms? Like what's a standard rate and how would we market that? So like, rates right now are 7. With this one, we could do a rate of 6, which, you have a sheet that shows your monthly payment and all that, or comparison sheet, or.
Yeah, we could put something like that together for sure, like a open house flyer that shows you your payment at a certain rate.
Right.
I
guess buyers are savvy as to what their rate is if they're shopping. Mm-hmm. So if they saw a rate that was in the description or something, they could say like, we could get this for a little bit.
Yeah, if we could go 6 1/8 with like, let's say 1.5 or something like that. Whereas like, they might be looking at another bank that's, 6 3/4 with a point or something like that. And they're like, all right, well here, we wouldn't even have to pay the points, because what's going to happen is the seller's going to pay the points rather than reducing the cost of their house.
Right.
So rather than reducing from 450 to 425, which is going to cost me 25 grand out of my pocket, I'm going to put $10,000 into a buy down, right? And I'm going to buy down their rate instead. So I'm not dropping the price of my house by 25 grand. I'm only losing 10, right? And it adds more interest, more buyers, more offers, you know, and then someone else on the other end is very happy because they get a free rate buy down, you know, paid by somebody else.
Can we put that rate in the public
Yes,
remarks?
yeah, you actually can.
Yep.
Because that has nothing to do with commissions. That's the only thing that we're not allowed to
Yeah.
advertise.
Right.
The question is, you know, could it have as much impact as a reduction would, right? Reduction would be seen by more, so this is people who would be reading the descriptions.
Yeah,
But
which a lot of people don't.
a lot of people don't.
For me, a reduction would be better because it's gonna be blasted out to everyone.
Right.
And then also, seller-wise, they're gonna be, if they hit a reduction, even though they're paying 10,000, whatever, towards the discount point, they're gonna be paying less commission and
Yeah.
potentially saving money if they just do a
But
price
if
reduction.
it was the choice between a buy down of 10,000 and a reduction of 25,000, they might be more apt to, hey, you know what, from a strategic standpoint,
Yeah.
maybe we try this rate thing first, and then, you know, when we're still not getting any traction
Yeah.
because the price is too high anyways.
Right.
Yeah.
Then, you know, then we do the actual reduction and remove the rate buy down, right?
Right.
Could they, after they buy into that, they could just be like, listen, we're not,
Right.
we're out, and
Yep.
they get refunded.
Exactly.
Yeah.
Yep. Yep. Yeah. So no harm, no foul. You know.
That's interesting.
Yeah. So I think that's a great product, especially if you've got a house that's sitting, you know, 60 days and starting to look funny that it's sitting, right? It's like, all right, let's sweeten this up a little bit somehow, right? Rather than reducing the price. So this slide shows a little loosey-goosey. I'm going to kind of go through it, but kind of talk over it too. Let's see here. How do I?
I'll give out both of them. This is some nice paper. Right?
Oh, thanks.
Yeah, this is like 24.98, right? Okay.
I told him. I said I'm going to Carl's.
Yeah, that's right.
Do it
Good
right.
paper.
Do it right.
Give me the good paper.
Thought I had two, I was like,
I'll let him know that drew some attention.
Exactly. That's right. Tell the marketing.
That's right. All right. So the Cash to Keys program. Obviously, Carl's heard of it. Has anybody else heard of the Cash to Keys program or Buy Now Sell Later? I mean, obviously you have, right? Yeah. Have we done one, or you've done one before, right, with someone else?
I tried twice with another person at AnnieMac and it didn't work out.
Okay.
But I haven't tried one with you yet.
Okay. See, that's the
Gut
difference.
feelings about it.
That's the difference.
But Ellen just did one.
Ellen did
She's got
one.
one closing. Yeah.
Oh, okay. She did.
Yeah.
Oh, that's right. She had a listing that had one come to her, right? I think.
I don't know. She's had some buyers for a long time.
Oh, maybe it was them. Okay.
Yeah.
All right.
It's
Cool.
with Mark. I think it might be with Mark Townsend. Yeah.
All right. Good.
I'm not. Yeah.
Good. Well, as long as it's successful, that's all we care about, right? So the Cash to Keys program was brought up by the CEO of our company. He came up with this idea looking at the environment that we're in, right? Like we've got a very low inventory environment. And the constant objection is, well, I don't want to list my house now because I'm going to sell it in 5 minutes, and then what am I going to do? It's so hard to buy a house. It's taking 20 offers to find a house and get it under contract. And the way we kind of do things in this industry is a little backwards. Like, let's see you sell your house and buy another one at the same time. Like, even under the normal real estate world, it was hard to do. It was kind of like aligning the stars. Like, are they cleared to close? Are they cleared to close? Can we do this in the morning and buy the house in the afternoon? Like, it's never easy, right? So here's a way that you can flip that on its head and make a cash offer without a Hubbard clause. And how he was able to do this is with a private equity account. So what Joe did was he started a private equity account with millions of dollars in there, cash for this program. Now the program actually loses a little bit of money every year, but it's basically there to drive business, right? So we talked about the pain points, and we'll talk about the cash offer breakdown, the buy now, sell later breakdown, and then there's also a cash bridge also. So with a cash offer, you're looking at, statistically speaking, out of the first 2,600 we did in beta testing, 1.4 offers to get them under contract versus 8.6 offers with financing. Now that's just offers. So think about how many houses you have to drive them to before they make the 1.4 offers or 8.6 offers. It might be 20, 30 houses, right? So this is going to reduce the amount of driving around you have to do, reduce the amount of work that you have to do just because you're making a better, sweeter offer. So we're going to take their regular, conventional FHA or VA and turn it into a cash offer using our private equity. And we're going to give you proof of funds when you go to make that offer. So competing against cash offers when you don't have cash, that's a problem. So this provides a platform that's going to, get your pre-approved buyers with a legitimate cash offer backed by AnnieMac. Low inventory, we've touched on that. And this is going to remove those contingencies and remove the Hubbard clause to get your offer to the top of the pile. So no Hubbard clause, I don't need to sell my house, and I can make a cash offer, right? That's going to get you to the top. So the whole idea here is to drive business for you guys. And in turn, downsizing, reload, no mortgage is needed, a platform that allows clients to move into their dream home without the hassle of a mortgage. So these are just some questions to consider. If you're helping someone that is home sale contingent, or how to make offers without contingencies, and do you know anybody that stopped shopping because their home financing is contingent? And then anyone that's made at least 3 offers without a contract, which I'm sure you guys can probably think of worse scenarios than that. So the cash offers is literally like we're going to take their offer, put it into cash. AnnieMac is going to buy the house in cash and then basically do the financing in the background. So up front, what we're going to do is going to take a little bit of time depending on the client and how quick they are. Because I'm going to underwrite their file just like I would it was a live file. So I'm going to gather all the documentation, the pay stubs, the W-2s, and everything else we need. And I'm going to package the file together and I'm going to put it into underwriting. It's going to go through my junior loan officer into underwriting. It's going to take about 2 to 3 days to come back out. So the whole process could take 4 to 5 days before I have them approved. But now you can go out with a cash offer with a bank statement in hand saying, here's $2 million in this bank account. We're making a cash offer. So now this cash offer program works in conjunction with the buy now, sell later program. So you can do it either way. So if someone has a house to sell, you can use the buy now, sell later program. If they're just a buyer, I can't do it for chattel loans. I can't do the first time home buyer loans, but we can do conventional VA and FHA this way. Single family and condos, 2 to 4 family. We can do investment properties, but single families only. And they're allowed to have up to 4 finance properties.
You can do VA that way.
Yep. VA and FHA. So if you've got FHA buyers or VA buyers that are out there having a hard time getting their offer accepted because someone looks at their pile of offers and they go, VA and FHA, let's throw those in the garbage. Let's look at all the conventional loans. All right? Because that's what's been happening. And it's nice, I've had quite a few clients where in the past I've had to take them out of VA and put them in conventional just so we can get their offer accepted. And it's like, we'll refi you into VA later. But it's not the best because they got to put money down. There's mortgage insurance, Sometimes for the lower credit scores, it's harder to get a loan. VA is way more forgiving with lower credit scores, and they're way more forgiving with the interest rates too. They're much cheaper.
Are there any additional fees to be able to use these programs?
Yes, and I'm going to go over that at the end because it's a little confusing. It's easier if we go over it all at once.
Yeah.
But that's a good question. This is the process on the cash offer. So like we talked about, I'm going to get them fully underwritten up front, do the approval, and then we're going to do a welcome call with them. So we're going to have you on the call with the client, with our cash to keys team, and we're going to go through, okay, this is how you're going to make your offer. This is what you need for cash available. This is what your EMD is going to look like. This is what the fees look like. And we'll go through all that. And then you'll go through and you'll make a cash offer on a house, secure the home under contract, and now, if they can close on time, they can still buy with a mortgage and there's no fees for the program. If it looks like that's not going to happen, we'll just use the cash to keys program and we'll close like that, and then we'll do the financing on the backside.
And that's a really important point because a lot of times you can do it just like regular. Like my cousin, we did just regular, right?
Right.
We ended up, it was buy now, sell later too, but we ended up just closing just like a regular thing. But the cash offer was able to get us to that point where we could,
Yeah.
take the next steps.
Yeah, because he was able to make the cash offer, get the house under contract, and he ended up selling his house first before he closed on the one he was buying. He had a place to live, so no harm, no foul there. And then he was able to close on his, without the fees, which was nice. So the buy now, sell later program, is that legible up there? Okay, good. Very similar process. We're going to get them pre-approved. Again, it's going to take about 4 to 5 days. All right, you're going to go out, find them the house, get it under contract, and what's going to happen is there's going to be 2 contracts. There's going to be one that, the first one is going to be AnnieMac buying the home from them in cash. So you got the seller over here, AnnieMac's going to buy the house. Now they can list their house. Now that they've secured housing, now they can list their home, and they've got 6 months to sell their house. All right, once that house is sold, now we do a simultaneous transaction, just like you would normally. Now the buyer, after this house is bought in cash by AnnieMac, you can move into it. So they can go ahead and move in and clean their house up, stage it if they want, put it up for sale, and they've got 6 months to sell their house. I don't recommend taking 6 months because the longer they wait, the more money it costs them, and we'll go over that a little bit later, but that's essentially how the program works. So this is helping creating listings, because if you're going out to a listing appointment, people are on the fence and they're not sure, you're making phone calls and like, well, I think I'd sell my house, but I'm not sure if I want to because I have nowhere to go. Mention this program to them. It's not for everybody. There's a cost involved to it. They have to have a lot of equity in the house to make this work. And I'm talking probably 50% or more to make it work. And I'll go over the math with you on that as well, so you have an idea how it works. But, for the right client, for someone who's looking to downsize, something like that, I did 2 for 2 older women. I think, one was like 78, and one was like 80. One was moving out of Carolina up to Connecticut to be with her family, and the other one just needed to downsize. And it was a little confusing for them both because they're older and getting the documents in. I think that was the hardest part for them, but the program worked for them exactly how it's supposed to. They had plenty of equity in the house. It cost them a little money at the end of the day, but it took all that stress off of simultaneous closing off the table. And it just made it like, okay, good. I found a house. Now I can move in, get my house for sale, sell it, and then close. So it's a little bit of a long road because there's 2 transactions, but that's the way it has to be done, really. All right. So you could do up to 1.5 million on first and second homes, and we can do the conventional and VA. This should actually be updated. We can do FHA as well on here. And this is great for new construction buyers as well. If you run into a house that is, halfway built, you can go through and give them the offer now in cash, and builders love this because they know it's sold and they know it's going to sell in cash. And AnnieMac backs this up too. So if your client goes out and buys a Mercedes and runs their debt to income ratio through the roof and they no longer qualify, we're still going to step in and buy the house. If for some reason their loan goes sideways, we're still going to step in and buy the house. The only time we're not going to step in and buy the house is if there's something wrong, like it's got a shot septic tank or something like that, like it's an older home and it's got a serious issue with it. We're not going to step in and buy it. But if the loan goes sideways for some reason, we're still going to step in and buy it, and that's the guarantee. So for a new construction home, that's great because the builder knows they're going to get their money. They know on this date, this is going to close no matter what, as long as the house is done and we got a CO, it's going to close and I'm going to get my money. So builders love this. And then closing time frame, they've got 6 months to sell the exiting home, and we talked about the guaranteed sale. Now, valuation on departing residents. So there's a couple different ways to do this. We can do a AVM or BPO. So AVM is buyer's going to take their phone, they're going to download an app, they're going to walk through their house, and they're going to take some pictures of the inside of their house. They're going to send it into our company. We're going to run our comps, and they're going to come back with a value. It's not necessarily what that house is going to sell at. It just gives us a value what they're roughly going to sell their house at, right? We want to know if it's worth 300 or 400 or 325 or whatever the number is, right? Roughly. Now the math on that is we're going to take that number and we're going to discount it by 20%, because worst case scenario, and we have to run off worst case scenario, 6 months from now they still can't sell their house. AnnieMac's going to step in and buy it, but they're going to buy it at 80% of that AVM value. Okay, The other way to do it is the BPO, appraisal broker price opinion, which is actually have someone go through and actually take the pictures and they're physically on site. Sometimes that's better because we get a better idea of what the condition is versus the buyer going through. So what we don't want to have happen is they take the pictures, send it in, we get a value of 400,000, and then you go in to assess the place to put it up for sale and go, oh, this can't sell for 400,000. It's in need of work. We got to go 350, right? Then we have a problem. So I always recommend if you're selling a house, get your eyes on it first, obviously, which I would assume would be done anyway, but just have to throw that out there. Here's the buy now, sell later process, very similar to cash offer process. We're going to do that same approval up front, take about 3 to 5 days, and then we're going to do the same welcome call. You're going to go out and you're going to make a cash offer on a house, secure the home for sale, and then you're going to list their house for sale. AnnieMac's going to buy that other house in cash, all right? And then when that house sells, then we're going to do the final closing. Now, while they're in the house right there, they are going to accrue some rent, and that comes to a little bit less than 1% per month. So running through the numbers for you on like a $450,000 house, trying to remember the math, it's about 125 bucks a day. And if you gave me an address and said, hey, Mike, you know, what would the rent be on this? I'll figure it out for you and let you know this is what it's going to be. And we like to break it down per day. You know, that's why it's going to get expensive if it's 30 or 60 days. You know, let me get my calculator here. I can.
But the key would be is once you
Bless you.
once you get a contract accepted, you get the house listed immediately.
Exactly.
So you're limiting that time in between.
Exactly.
If there even is any.
Yeah.
Because ideally, you know, when you talk about selling the house for 80% and things like that, you know, I'm sure the statistics on how many houses AnnieMac has bought is like none.
Yeah, it's like 1 or 2, but yeah.
1 or 2.
Yeah, very little, yeah.
So I mean, in this market, we can sell homes, and it's up to us to talk to our sellers to go through those worst case scenarios. We play a big part in all this to figure out, okay, what's it going to be? Like I had somebody go through this, and they did the AVM, and they were like, oh, it's, you know, it was 500, and AnnieMac said they would buy it for 420, and I'm like, guys, disregard that. I mean, that is worst of the worst case scenario,
Right?
Because we'll be listing it at like 585, and we'll probably be over 6, you know. But that's only if we're unable to do what that is, and we'll be listing it immediately and everything. Like
Right.
That. So,
Right.
you know, that's where we come in to help explain, you know, the in-betweens of all this.
Right, right. And 6 months to sell a house in this market is a lot.
You'd have, yeah.
Yeah.
I mean, there must be a big problem.
Right.
Or,
Right, 100%. Yeah, so at $125 a day, 30 days would be $37.50. So it's not cheap rent, right? But if you're talking to someone who's selling a $700,000 house and they're buying something for $400,000, they've got all this equity in their house, it's the cost of moving money at the
yeah,
end of
and
the
they
day.
want the luxury of having the money.
Exactly.
Right? You know,
Right.
it's not for free.
Right, it's not for free, right. Yeah, because everybody always asks me about the rent back, and you know, and if you come to me, actually when the client comes to me and asks me, okay, I want to buy this house, it's $500,000, what's my rent back going to be? And I'll tell them this is what it is per day, what it's going to be for 30 days, this is what it's going to look for 60 days. So when they get to the closing table and they got the CD in their hand, and they're looking at these numbers, I don't want them to have, you know, an epiphany that all of a sudden it costs money, right? Like, I want to go through this stuff up front with them and be fair so that they can make an informed decision before we go through all this, right? Because I don't want them, you know, dragging you around thinking, yes, they want to do this, and then all of a sudden they don't, right? So here's the cash bridge, very similar to both these programs. This is made for the person that's got enough equity in their house where they can go out and buy a house in cash, right? So if I sold my house today for $800,000, it's totally paid for. I can just go buy something in cash. But again, I don't want to sell my house and close on it because I have nowhere to go. So we're going to give them a bridge loan on a certain percentage of the value of that house. I think it's up to 80%. And they can go out and buy that house in cash, sell their house, pay the loan back. So it's just a short-term interest-only loan. So what we did was we took that cash bridge and we basically just put it on steroids to create the buy now, sell later program. When you think about it that way.
Sorry, Mike, is it for people who have the cash is actually the current equity in their home, or cash outside of that?
No, in the home.
In the home, okay.
Yep, exactly. Yeah. Or let's say someone's got a sizable 401k. They've got $2 million in their 401k and they're like, well, I'm just going to take money out of my 401k and I'm going to buy the house in cash and then I'll sell my other house. Great idea. I don't think the financial planner is going to love that very much though, because there could be tax implications. You're pulling money out, you're putting it back in. I got to sell all these stocks that, and when you go to put the money back in, maybe those stocks are now higher and you're buying them at a higher price than you bought them before. And it's just going to disrupt everything that they've already got going on in their investments. Right? So CFPs like this a lot too because it keeps the cash where it's supposed to be, which is invested. Right? Here we're just going to give them a small bridge loan. It's going to cost them a little bit of money to borrow that money, buy the house in cash, and then close that out. So I think for downsizing and for the right scenario, this is a perfect product. But again, it's not for everybody. It's not for every scenario. Primary residence, second home, and investment properties for those, 640 FICO or better, which is pretty typical. Total assets have to be 105 of the purchase price. Liquid assets about 5% of the purchase price. All right, so to get you guys certified, if you can just pull that QR code up on your phone, we can get you guys certified for this program.
I think I'm already certified.
Yeah, I think so, too.
3 times already.
You're certified 3 times over.
Yeah.
You should put that
I
on.
know.
And these are all the answers to that program. So here, I'll put that back so you can pull that up.
There you go. Or just take a picture of it, and you guys can do it later if you want to. Or take a picture of both pages.
And then I've got a slide here that talks about what they need for an EMD check and what kind of cash they need available as well. So I'll give you guys a minute to do that, and then we can kind of go over that.
Can you email me this slideshow?
Oh, sure.
Okay.
Yeah.
That's a good idea.
Yeah.
Mike, I have a question. With cash to keys, is there still a restriction on it can't be more than a 10-acre property? Because that's an issue where we are. That's one of the deals that I had that fell apart because the property was more than 10 acres.
Oh, okay. I don't know that that's an issue.
It was. I don't know if it still is.
Okay.
Yeah. I think that was the only issue, if I recall.
On that one.
Yeah.
The second time the house was 200 years old, and they said it would be fully approved, and at the last minute they said, no, sorry, the house is too old, and they pulled it. So
Okay.
that was unfortunate.
Okay.
Yeah.
Yeah, I don't know that that's a thing, and maybe they took it out because I haven't heard of anybody talk about that.
Okay.
I know like when we run fees now with title fees, they ask us how big the property is,
Yeah.
like if it's more than 1 acre or not. And I know like Fannie and Freddie get a little funny on big properties like more than 20, 30 acres, but I'm not,
This was more than
yeah.
10.
So maybe it's the type of mortgage that they're going into or
I don't
something.
know. When I went to the training at the Pond House, it was still an issue, but that was a year ago.
Yeah.
So,
Yeah. If you want, I'll check on that and then I can
Yeah,
send you
it's just
a
because,
note.
again, we've run into that.
Sure.
Out our way. So.
Sure.
And you do have to send the property to cash to keys first so they can look at it and
Yes.
say, yes, it's an eligible
Right.
property.
Exactly. Yeah, that's a good point.
Part
Yeah.
of the process
Right.
of if you're using this solution to understand like when I was out with my buyers, I'd say, they're like, yeah, we really like it. I'd be like, all right, I'll send it over to cash to keys. And then they'd kick it back and say, yep, it's eligible. And then we would move
Okay.
forward with making the offer.
Okay. Did everybody understand that part? So when you go to make an offer, you find a house.
I wasn't listening.
No, that's okay.
That's okay.
I just ramble on and on. Don't listen to me anyway.
When you're out searching for houses and making offers, all right, you're going to make that cash offer. But before you go and make that offer, you got to call our cash to keys department with the address, and they're just going to vet it and run it through, look at the file, and say, okay, that fits the debt to income ratio, that fits what we qualified them for. They're going to take a quick look at the property just to make sure it's standing and everything like that, and it's not like half burnt down or something like that. And then they're just going to send you back a thing saying, yeah, you're good to go to make this offer. And then they're going to help you. They're going to walk you through the contracts too and help you set up the contract the right way, because the first contract you write is going to be AnnieMac as the purchaser in cash, and they're going to be buying this house from Joe Smith or whoever it is.
So now we're filling this out as of right now. You're our loan officer?
Yes, sir.
Okay.
Unless you want to pick somebody else, but
I don't know anyone else.
that's the attitude.
Mike's working with a couple of my clients.
He's written and he's good at communicating with the clients too, so which is a big part of it.
Thank you.
Because it is a little bit more involved than your standard.
It is.
You know,
It
but-
is.
But it's a good solution to have in your back pocket when you're
Yeah.
sitting down and talking to buyers and sellers who are trying to do something.
Yeah, right.
Yeah,
Yeah, it gets a little confusing.
it does.
Yeah. But for you guys, when you work with me, I'm going to call your clients right away. I'm going to put them in my CRM. So if they're not ready today for some reason, credit score is no good, they don't qualify, they need to be at their job longer, I'm going to put a note in my CRM to call them again. And then I'm going to put you in my CRM as well, and I'm going to match all the folks that you've given me. So when I pull up your name, I can see the referrals that you've given me, and I can call you and I can go over, hey, these are the last 3 people that you sent me. This one's not ready. This one's going to be ready in a month. You know, this one I pre-approved for $200,000. See if you can find them something or whatever the number is, right? So just be aware that's kind of how I work and what I do to organize myself. And you know, I'll stay on top of it and stay on top of them because sometimes people aren't ready today or they got to fix their credit score or whatever, and it's, you know, it is what it is. You just have to meet them where they're at and, you know, keep rolling. But I'm not going to just call them and say, sorry, you don't qualify, click. And I'm not going to just blow them off. I got to.
Call me later. Call me when you're ready.
Call me when you get it together.
Call me when you get your act together.
That's a good one.
They essentially have to have, they essentially have to have some type of finance and have to have a certain credit score before you'll do this. So it's not for any financial reason.
All right. Any loan program, and when they're buying a house, they need credit scores and they need a good credit score. That is the number one hurdle. Because if someone doesn't have a credit score high enough for me to even run it, I can't do anything for them. I can't even run it and see if it'll go through.
Okay.
Right.
What do you consider a good credit score?
Well, depends on the program. Good credit score for conventional is over 700. Good credit score for FHA is 640 to 700. I can run FHA's 580, but it doesn't mean it's going to go through. So if I talk to somebody and they're at 585, that's the first conversation I'm going to have with them is like, I can run this, but don't be surprised if it comes back denied, because below 640, FHA is now looking for reserves, 3 to 6 months reserves. If you don't have like a 401k or some extra money in the bank, they're just going to say no. Unless I bring the DTI down. And sometimes with some of those borrowers, you bring that DTI down to where it's going to go through, they're not qualifying for enough to even find a house. Right? So I'll run through all of that with them and explain to them, hey, you might need a cosigner, or let's put you in a, you know, I've got a credit company that we work with. Let's put you with these guys. Maybe they can help you, you know, fix some of these trade lines. I'll let them know what I know about credit to help them get their score up. But again, it's about, to me, it's about setting up a game plan for them and saying, okay, listen, at 580, it's not going through right now. Let's get you up to 640 first, and here's how we're going to do it.
Yeah.
So when I pull credit, I'll see through my credit company's Actus what their potential improvement is.
Yeah.
And then I can run a report on that. And it says, oh, if you pay your Amex card down to a balance of $279 and do this, this, and this, it's very specific. If they've got the cash on hand to do that, we can do that and do a rescore and try to get the score up. But not in every case is that going to work.
And
See, you have software that tells you what to do,
Yeah.
specifically in a person's financial scenario.
Yep.
Oh, that's cool.
Yeah.
if someone has a credit score over 800, could you get them more favorable interest rates or no? Is
Yeah, I
it
mean,
Actus or no?
over 760, they're going to be getting the best pricing. Yeah. But if they come back to me, like if I price it out for them and they're like, well, such and such bank came back to me and they're a little bit better, if they can throw me a loan estimate, I can go back to my manager and I can usually get it, you know, get it ironed out so we're meeting that rate.
And for 1099s, how much work history do you guys like to see? Like 2 years?
So 1099 is considered self-employed, and they're going to need 2 years of filed history.
Okay, so
Yeah.
tax returns.
Yep.
Yeah.
But I do have non-QM programs that will work with 1 year sometimes.
Okay.
So if they're in the same industry and they went 1099, they've been there for a year,
Yeah.
I might be able to do it, depending on, you know, credit score and what the scenario is. Yeah. So again, to go back to that whole credit score thing, if you're an out-of-the-box option and I have to go to a non-QM program, having a better credit score helps hugely.
Yeah.
You know, if someone wants to go bank statement program, but they've got a 585 credit score, it's probably not going to go through.
Okay,
Right?
that makes sense.
Yeah. And what else was there? What else do we want to talk about, Carl?
That's the end of
That's
yours?
it. Yeah, pretty much.
Questions for you? Anybody got questions, comments, thoughts? Remember the talking stick.
What was that slide there, that certification thing?
This one?
One more back.
He wants
Yeah, those are the answers. Those are
Th-
the answers.
Those are pretty much the answers if you want to take a picture of that. Yeah.
I should have. I mean, I passed, but.
And we're here.
It should be fairly easy to get through.
I could have gotten 100. I hope you can't see my grade.
No, I don't see any of that. I don't see any of
You
that.
have to start over.
We just know that we just know that you're certified.
Yeah.
It's all good.
Well, I appreciate it, Mike. It is really important to have, solutions for your buyers, right? Not that you guys need to know the specific ins and outs of this, like credit scores and stuff like that, but just an overall knowledge of it, because you are going to be sitting down with sellers and buyers who have no idea what they're doing and need to find a solution, right? And you can say, like, if they say, like, oh, we own our house outright, well, maybe the bridge thing is something that they can do, right? Where it's easy for them, because the whole goal for us is to sell something, buy something, sell something, buy something. And a key component to that is the money. He's the guy. And if you can't get the money, we're all screwed. So we need the money, and we need good mortgage people who can get money. You can get us money, right? Get our people money. There you go. There it is in a nutshell.
Yeah, right.
Yes. That's it. All right, cool. Well, thank you, Mike.
Yeah, no problem. And then shoot.
So, like Carl mentioned, say someone does own their home outright. What would be the benefits of doing like the bridge loan versus like saying pulling out a HELOC for a substantial down payment?
Yeah, I mean, you could certainly do that as well.
But would there be advantages to doing the bridge loan over a HELOC, or?
I'd have to look at them side by side. I mean,
Probably pretty similar.
I think they're probably pretty similar. The HELOC might actually have a higher rate with it.
Yeah, that's what I was. Yeah.
But
Okay.
you're right. It's pretty similar for sure.
Yeah,
For
I guess
sure.
it'd be how long do they plan on floating it, right? Like,
Yeah.
or
Right.
the in between.
Right. That too.
And then like the nuances of the fees, but it's
Yeah.
probably splitting hairs.
Or if they're not sure if they want to sell, right?
Right.
Yeah.
Yeah, good point.
So this QR code here, so you can get a customized toolkit if you want. My marketing team will make you up flyers and social media posts and stuff like that.
That's cool.
Put in a request for that, and I'll have them send me the toolkit, and I'll shoot it over to you. And it's got a bunch of different flyers and stuff in there to help you guys. We do have in beta testing right now a buy now, sell later express. I don't want to overwhelm you with too much today, but it's basically a way to do this a little bit different where it makes it a little bit cheaper, and it's only one transaction that gets closed instead of two. So what we're going to do is we're going to take the equity that's in their house, and we're going to give them, like she was talking about a HELOC, basically going to give them a second mortgage, and I'm going to qualify them on the one home. So we're going to eliminate that other home from the debt to income ratio completely.
Their original home?
Right. So, glasses.
Is this program specific to your company?
Yes. I mean, there are some other companies out there that are trying to do the same thing. I don't know how successful they've been so far. So this, again, is very similar. We're just going to give them a second mortgage on their first home. And then we're going to eliminate their first home from the debt to income ratio. Because normally you'd have to qualify for two houses at once. Very few people, unless you're making like $400,000 or $500,000 a year, and sometimes even them can't do it because they've got too much debt. Here we can eliminate that from the debt to income ratio. You can now afford, let's say I qualify you to go out and buy a house with 10% down. Well, now we're going to take that cash that you need, and we're basically going to issue a second loan on your mortgage. Close on that first. Now you've got cash available. You go out and buy the house. Now it's not a cash offer, and it's going to be in your own name. That's the big difference. The regular buy now, sell later program is going to be a cash offer, and AnnieMac's going to buy it in cash. Here you're going to be making an offer. It's not contingent. On the sale of your house. You've got 5 months to sell your house. Otherwise, same thing. AnnieMac will step in and buy it at 80%. So this has a cost to it of. It's a 3-point origination fee right here. Interest only 9.5. But again, it's supposed to be a short-term loan. So if I can tap into $200,000 on your house and it's going to cost you $6,000, I mean, to close on that, but you only need 100 to close on the new one, well, then we'll just do one for 100. Save yourself the $3,000, right? We don't need to tap into all of it, right? And then after you sell your house, then if you want to do a large chunk payment to bring that principal payment down, you certainly can. So this, I'm just going to show you this real quick. So this is a side-by-side comparison, just an example. On the left, $500,000 purchase price, and I'll go over this in a second, the cash retainer and the EMD check, and your total escrow is here. 1% cash retained by Cash to Keys team, transfer tax, and then the rent back, you're talking a total cost of $24,250. Whereas here we brought that total cost down to $14,875. And there's only one transaction. So there's not going to be a transfer tax, there's not going to be any rent back. And I did the math, we can actually tap into more equity in their account, into their house with the Express program versus the other. So the other thing I just wanted to real quickly show you, just so you've got an idea of the math. Because again, I'm a math guy and I like to go over numbers.
I'm glad you are.
So this is Connecticut. Okay, so another thing too, the Express program is only in a couple of states right now. It's in Connecticut, but it's only in about 4 states. The regular buy now, sell later we can do in 48 states. So you've got someone that's moving from whatever, Florida up here, we can use the buy now, sell later program. All right, so I wanted to go over with you. Okay, so let's look at conventional right here. 1% EMD, 2% CO retainer. So what that is that's a retainer for the attorney. So what they're going to do is they're going to do a 1% EMD on the contract, and then 2% is going to immediately go to the attorney. And they're going to hold that for the rent back, for the transfer tax, and the 1% fee that AnnieMac's going to get paid. Okay? And then whatever's left over out of that 2% is going to go towards their closing costs. So we're basically collecting a little bit more up front from them so they've got some skin in the game, and the attorney knows that they're going to get paid. Right, because the attorney's got to do the first closing and the second closing. On the second closing is going to be a transfer tax, because in the state of Connecticut, when you sell their house, is a transfer tax, right? Someone's got to pay that. Unfortunately, we can't pay it, so they have to pay it. So it's going to come out of there. And then whatever's left over is just going to go towards their closing costs. So that's the cash offer there. You can see it's a 1% EMD, 2% retainer, 1% EMD, 2% retainer. For VA, we bring it down to a 0.5% EMD and a 2% retainer. Now on the buy now, sell later, we can do the FHA. This needs to be updated. And it's 1.5, 2.5. Buy now, sell later, conventional, 1.5% EMD, 2.5% retainer. So basically they need 4% liquid funds of the house they're buying. So once again, it's not for everybody. They have to have some equity in their house and they have to have some cash on hand. Any questions about how this works?
You go over all that with them to see
Yeah.
what they qualify.
Yeah. I don't want you to memorize this. I don't want you to, talk about it too much, but just make sure that they understand that they need some cash up front. So if they say, oh, I don't really have any money available, but I really want to sell my house, might not be for them. If they just bought their house 2 years ago, there's probably not enough equity in the house. It's probably not for them, right? We're looking for someone that's been in their house for a long time. They probably have about 50% equity in the house, and they've got some cash on hand. They're in a good position to take advantage of this program. But I'll go over it with anybody. I mean, you can send me anybody and I'll run through the numbers with them and see if it works.
You got to be sick of explaining this.
No, not at all.
No?
I feel like I'm getting better at it. So that's pretty much how that works. And again, we can do the second homes and the investment properties too, but investment properties we can only do single families.
Gotcha.
So no multis.
Okay.
But I find this piece to be important because I don't want to leave you guys in the dark as to what the cost is and how it works. But I also don't think that you need to really necessarily take the time to explain it to them. Just tell them there's some cash involved. You're going to need at least this much. Talk to Mike. He'll go over the details. And if you want to do a conference call with your client, I can do that too. I don't care. Whatever you want to do. Whatever is more comfortable for everybody.
Cool.
Yeah.
All right. Thanks again, Mike.
again.
Oh, no problem.
Appreciate it. Any other questions or anything? Everybody's good? Cool.
Awesome. Well, thanks guys for coming.
Thank you.
Yeah.
Thank
Thank
you.
you.
Yeah, absolutely.